I used to think that the 1000% trades, the 10,000% trades, right, the 10x, the 100x were completely out of reach, guys. I thought that they were 1 in a million. And they're pretty rare, but there is a way that we can catch some of these. So I had a nice 2000% trade just this last Friday, really Thursday and Friday back to back were pretty big outside days. And these days we should really be tuned into the market looking for maximum EV, right? These types of days are the opportunity for us as traders to greatly impact our P&L. It doesn't mean that we should just YOLO, but we should be looking to put on more risk for sure. So had a nice little trade again on Friday. I'm going to break down what the setup was, what some of my thoughts were. We're going to look at both the futures and the options market. This is something that I don't see a lot of people talk about. I've talked about it in quite a few of my videos, so go back and look at any of my options videos. I'm always talking about the analysis of both futures and options, the option chain, looking at outside interest, as well as combining that with the TA, or we don't have to call it technical analysis, but just the analysis that we're doing in the futures market to come up with really good options EV, right? Asymmetric returns is the name of the game, guys, right? There's no point of trading options if you're going to go for, 50% or 100%, right? It's a complete waste of time. If you're doing that, you are probably a losing options trader, right? You want to be going for, 300-400% returns on your options trades, especially if you're trading zeros, okay? Which is really what I'm talking about. So let's do an asterisk on that statement. If you're trading zeros, you need to be going for bigger returns. There's almost no point of going for small returns with zeros because that means your timing is probably off, right? The impulse, right, or the change in the premium on an impulse on a candle should adjust your premiums so much so that you're getting, 2, 3, 4, 500% returns on your zero dated options. If you're not, that means you're probably scalping, you're skittish, you're scared, and you're approaching it all wrong. If you're new here, my name is Forrest. I invest in stuff. I'm a day trader. Been doing this for a number of years, trading my own account, trade prop firms as well. Now recently partnered with a few different firms. So all the firms that I think are worth checking out are down below in the description of this video. If you want to get a discount on a prop account, those codes will always give you the best current deal. My favorite being My Funded Futures. Check them out. I also do videos on their channel. Go to My Funded Futures channel. And if you're looking for a Discord home, click the Discord link. It is a premium community. We day trade live every single day, 9:30 a.m. to 11 a.m. So if you want to learn how to trade for real, check us out. Let's get into the video. Fun fact, this is actually my second time recording this video because the first time I forgot to hit record. So I have 20 minutes of me talking and doing the screen recording and everything, and then just not having the video. Redo. The craziest thing about doing YouTube is like I gotta act normal on camera for you guys, but I'm low-key kind of out of my freaking mind. I'm a little bit nuts. I'm a little bit crazy. Nuts. All right, let's look at the 4-hour chart. We've got the ES 4-hour and NQ 4-hour. I've got arrows from the last time I was recording. I want to clean some of this up a bit. So per usual, we're going to start on the higher time frames, guys. You always want to start on the higher time frames when you're doing analysis. Let's just look at ES on the daily first of all. So we'll go to the 1 day. This is TradingView, by the way. If you're not familiar with TradingView, it's just a charting tool. I do all my analysis on TradingView. I do trade through here sometimes, connecting it to my broker. It's a great tool. Check it out. Okay, so let's clean up our indicators. We don't need the 8 EMA. Actually, we do need the 8. We don't need the session volume profile. So if we replay going back to before the Friday bar, we can see that Thursday we sold off and we came down. We have the 8 EMA, the daily 8 EMA is this blue line right below us. Okay. We've been riding this daily 8 up for quite a while now, right? So very strong trending behavior in general on the daily. And we can see that when we play this candle out, we came down, we dipped, and we touched it. We go to NQ on the daily. Okay. NQ daily. Same thing. NQ came down on Thursday. This black candle is red. I use white and black instead of green and red. So the down candle came down to the 8 EMA, bounced. Cool. So both of these are indexes, and we have the thesis, right? Because of this 8 EMA here, there's a shelf here on the volume profile down here at 20,277. We can also go down to the, sorry, not the 15, the 4-hour. See that we cracked these EMAs just a little bit, but ultimately this data candle Friday, we had this liquidity grab at the 8:30 a.m. data, right? So this 6 a.m. candle shows it. If we go to we'll just do the 15 minute actually. 15 minute 8:30 data candle does a liquidity grab lower. So we're doing this rounding out shape here. See, it's rounding out. Liquidity grab starts to roll up, and we're above the shelf on the volume profile on NQ. Let's go back. ES. 15-minute, same thing, right? We'll zoom out so we can see the volume profile on the right. Let's see where we bounced here. Low value area, liquidity grab, starts to roll up. So there's a lot of reason to expect this to come up. So I'm looking at SPX because I'm trading SPX options. Have that in mind. Okay, keeping that in mind as well. And I want to look at call strikes and what are some good call strikes to get. So we'll turn on the session volume profile and let's go back to before the open on Friday. We want to do the 1600 candle. There we go. All right. So it's still Thursday at this point. We had this, pretty big sell off and there's a few places that I could be looking. Well, let's play one more candle. Give me the forward. Okay. So we get the close candle in there. The high up here, and we still have this mark from the first time I did this, but 56.40 ended up being my primary position. Why? Because if we look at the high, it's at 56.42. So I'm looking for a premium that can get swept. It can go barely in the money because I want to get maximum gamma, right? 56.40, I also have 56.50s for similar reasons. So if we do a sweep, 56.50 will have better tail end gamma, okay? So I'm looking at both of these strikes. And when I do these end of day gamma trades, guys, I always, or just any gamma trade in general, I'm always doing multiple strikes because I want to make money. I don't want to be perfect. And this is like, zooming out from this trade review in general, a lot of you guys, like when you look at a trade in the past, you're like, oh yeah, if I would have shorted from here, from the tippy top and then took profits at the bottom, with 2 ES, I would have made, 6.6 grand because that's 66 points. Except you'll literally never do that. You will literally never get a short at the top and get out at the bottom. Okay. Let's just imagine if you're pretty good, you get 60% of the move. Okay. That should be your expectation. Something like that. 60, 70% of the move, because you're going to want confirmation, right? If you front run the level, even if you get a perfect entry, which we do, right? We very often will get near perfect entries, but we hardly ever get both sides. Like if I get a perfect entry, we can see how it starts to consolidate in the end. It gets, it loses momentum. So you're not going to get a perfect trade. So keeping that in mind with options, it's the same. I don't want a perfect trade. I just want to capture most of the EV. So doing my back testing, things like that, I know, okay, this trade is very likely to 10 or 20x. I am going to go for or if I know it's going to 20x, then I might get out at a 15x increase, right? For example. But in any case, I do 56.40 calls, 56.50 calls. This is mislabeled. 56.50 calls. And these were my two primary positions, okay? Based off of, again, this coming up, we have the prior day POC here. Okay, there's this POC up here. Huge imbalance. And if this is a liquidity grab lower on the daily, this is probably going to sweep this candle. It just makes sense for it to sweep the high, right? And we actually did. So let's take a look at what the premiums did. So we'll go to my handy dandy tool. We'll look at 56.40s on the 12th, okay? And for how this works, guys, put in the ticker, put in the strike. So I'm doing for weeklies. I choose the expiration, okay? I choose the date that I want to start charting from, the 12th, and I choose the date I want to end charting from. So I want to do just the 1 day chart. So I chose those values. My entry was 86 cents on these, right? So obviously didn't get a perfect entry of 5 cents. That would have been nuts. 86 cents of ended up my total position. I tranched in. I ended up with 105 contracts at the end, and I got out around $16 with my best exit, right? So 86 to 16, if you're not good with the math, we could do $16 divided by 0.86 is 18.6x, right? So right under a 20x return. Some of the contracts did a little bit better. Again, I'm just rounding to what the average position was, right? So right under a 20x increase on that trade. And that was a really, really good trade. That was a solid trade, 105 contracts, right under 20 grand or so. Very, very happy with that. Going back to the chart here, play this out. You can see here, came up, swept, boom, got this little sweep. Both of these went in the money. It was insane. Then there was actually another sell-off gamma, which I did not get because I was in a meeting, wasting time in a meeting. Should have been trading. So that is the trade, guys. Very, very simple. I want to call out the key components here. I don't want to overcomplicate this. I was going to go very in-depth, but I think what's actually going to be useful is for you guys to understand that these trades should just match the TA that you see on futures. So let's go back to where we started, ES. we have the liquidity grab lower. We know that data candles will very often sweep both sides, and it only swept one side, okay? So it immediately starts climbing. Pretty obvious upside in that regard. So we should be long bias. Play long on futures as well. That's great. On the 4 hour or the daily, look at the 4. You have to think, what makes sense? If that's a liquidity grab lower, came down, touched the 50 EMA, it's probably going to sweep the high. That's just normal, right? So ES barely swept its high. SPX is going to do about the same thing. I combine that with what I see on NQ. All right, I see NQ is a little bit lagging. It's more tech heavy, but still, you know, similar move. So I'm looking for an options trade. And again, the day before was a very large downside day. We can see this previous day was 604 points. Okay, so huge imbalance in the market in the futures indexes. I'm combining that with what I see in options. When I was looking at the options chain, by the way, there was outlier interest. So when you actually open up your broker, there's a column that says open interest when you're looking at options. And I'll show you the open positions at the start of the day. There was a ton of outlier interest. We'll go back to SPX. There was a ton of outlier interest up here at 5640, right? 5630s previous day, 5650. Okay, there was outlier interest there. So that tells me that there are other people who have similar thesis. There's not a promise. Just because there's outlier interest doesn't mean there's a promise. You actually want interest where there's heavy interest to truly be an outlier. Like you don't want to see interest all over the place. That's kind of a sign of indecision. But you can use that with confluence with what you see in the futures market to make these outside trades. Keep it simple, guys. Manage your risk. You definitely don't want to be getting into these premiums. Let's go back to this chart right here, right? You could have gotten at $6, you know, would have came off and you would have made profits, but you really need to be looking for a good entry with this. With options, timing is everything. If you get in at a bad time, your leverage changes significantly. Even just getting in from, you know, it's obvious, but if somebody has a $2 entry on the same trade and I have a 20-cent entry, I have 10x better leverage to them. 10x, right? If we take the exact same exit, it's so critical that you're patient and wait for good entries. The thing with options is that due to theta, when the market is going sideways, your position is losing money, right? Options are always losing value most of the time, right? Unless IV is increasing and things like that, it's losing money. So in the morning, there's a lot of volatility, a lot of volume. We get the first impulses in the day. Middle of the day, lunchtime, consolidates, right? All premiums are losing value, right? Unless we're grinding up towards level. But even if we are grinding up, beta could be outpacing the movement in the market. So even though it's moving in your direction, you could be losing money. That happens all the time. And then at the end of the day, we get our last wave of the day, right? And that's where you make your money. So you should be playing around the waves in the market. Otherwise, I promise you, you're going to either lose money or your leverage is not going to work out, right? So don't be positioning in the morning for an end of day move. That's silly. You could just wait end of day, right? Most of the time, but just do not forget about that time component. That's it for this trade review. If you want to get insights to trades like these or just learn about them more, ask questions of me in general, join the Discord, right? So we're in there again every single day, talking about these trades, setups, other trades, futures, general analysis, stuff like that. Yeah, I'm here to help. And subscribe to the channel. See ya. Peace.